All right, everyone. My name is Dave. Pretty new to the Sub Two family. New kind of to the real estate game. Been doing a little bit here and there over the past couple years. I've got a guide business, a fishing guide business up in Alaska, and I know, like most everyone else here, that I've gotten a ton out of this community. And I thought, what could I do to give back to the community? Given that I have limited real estate info to share. Um, so I thought I'd kind of go over a little bit of, just like business credit and how, you know, utilizing business credit can help you not only self fund but also fund other deals and also just to help keep your business financially stable. It's something that I've kind of stumbled across over the last 6 months or so, and I've been running businesses for close to 20 years, and just kind of been fumbling along using my personal credit and not really understanding the advantages of business credit. So hopefully this helps you guys out. I'm not a financial advisor, nor am I an expert in this field, but definitely an area that I've kind of picked up on lately and wanted to share with you guys a little bit of what I've learned and some of the mistakes I've made. So we're going to kind of talk about ways that you can largely through business credit cards with 0% interest for anywhere from 6 to 18 months, how you can access realistically anywhere from 50,000 to 100,000 plus in funding that you can actually gain fairly quick access to. So, like I said, you can fund your business or deals that you might come across. So for starters, some of the business credit types, there's actually a couple different categories of what might be considered business credit. There's business credit, but also corporate credit. And corporate credit is basically where you use your employee identification number and the credit that you've built, your credit profile you've built on the business side in order to secure funds without having to use what's called a personal guarantee. So for most of the stuff we'll talk about today would be all about uh, being personally guaranteed credit, but it's on the business side, and we can kind of talk about what that looks like as we go along. So the best types of actually business credit are going to be your revolving accounts that you're able to draw on, pay down, and then whatever you've paid down, you're able to actually draw on if you need access to those funds. So revolving accounts are great. These would be things like business credit cards, business charge cards, business lines of credit, and there are some other bank balance based credit cards and lines of credit. We can talk about that a little bit later. Um, One quick thing though, when we talk about business credit cards and business charge cards, the main difference between the two being that most charge cards, like your American Express Platinums and Gold, they're going to be basically what's considered a charge card, where usually 30 or 60 days they're going to want you to pay off the entire balance, versus a credit card that has a set limit and you can carry a balance month to month. With charge cards, they tend to not like you carrying a balance from month to month. Some big advantages to business credit. Like I said earlier, you're able to do self funding. So whether you need money to fund your own deals or to purchase equipment or supplies for your business, you're able to do that and get access to capital pretty quickly in order to take advantage of opportunities that might present themselves. You're also able to lend these funds out and get a return, or invest these funds for a return. You can use them for obviously other business investments as well within your own business, but also investing in other businesses and real estate transactions. Very often, you're going to have 0% interest for anywhere for 6 to 18 months on new accounts. So you're able to take advantage of being able to deploy this capital, make interest, pull it back in, and redeploy it over and over for at least 18 months. A lot of times too, these credit cards and even lines of credit, and we'll mostly focus on credit cards, business credit cards, but a lot of times these can be anywhere from 2 times to 5 to 10 times the amount of the limits on your personal card. So a lot of times on personal cards, you may have a $5,000, let's say, Chase card, and in a lot of cases, you can actually get a 10,000, a 15,000, a $25,000 Chase business card, based on the fact that businesses obviously need more access to more capital. And so we'll kind of talk about that a little bit later on as well. One thing that kind of led me to this question here is, why business credit? One of the things that I had fumbled with for probably the last 10 years in business is, my personal credit score getting really high and then dipping down low, and kind of riding that roller coaster of my personal credit taking hits because I was using personal credit to help fund my businesses. So business credit helps keep your business and your personal credit separate. Well, like I said, you can take advantage of the 0% interest for 6 to 18 months. You can make the short-term and even long-term investments with this capital. And in an ideal world, you're going to be using other people's money to fund your projects and to make interest and to make money off of other people's money. You can often get really quick access to the funds, for things like down payments, business expansions, closing costs, renovations, all that kind of fun stuff. And with a good credit profile, you can often obtain anywhere from 50,000 to 100,000 plus. And I've heard of people getting $500,000, $250,000 in credit card and lines of credit. Some of the big mistakes, that people make with their credit is, I think first and foremost, not really understanding your individual credit profile, your credit score, how to make your credit profile, your individual credit profile more fundable, and then also how to obtain business credit. And, for me, I just spent so much time just assuming that I had to get like a personal loan to cover, employee like wages or, any kind of gaps in cash flow. I'd have to put it on my credit card or make bigger purchases on my credit card. And the most damaging thing that happens when you use your personal credit for those types of things is, going to be along the lines of utilization. So anytime you're using, in my mind, 10%, 20% or more of your available credit, you're really going to take some big hits on your credit score. And that's usually why people's credit scores are low. I mean, people that tend to think that they have good credit may have poor credit, possibly because they just have racked up the limits on their cards and have been carrying balances. And that's something we can talk about a little bit later here as well. A lot of times when people use their personal credit cards and lines of credit and even loans for business purposes, I mean, that can be a huge mistake because, like I said, it hurts your utilization, but then also it really keeps you from being eligible for future credit. Like if you really needed to make a quick move and you had little credit available, if you went out and tried to apply for something, odds are that you're probably not going to be, you're going to probably be denied for something like that. Another mistake I see people make, and I made this and I still make this, is to just apply for cards blindly and applying too soon before you're ready. And a lot of times when you're applying, for cards blindly, what I mean by that is you don't really know your true credit score, and you don't really know what credit union, or I'm sorry, what credit bureau, what credit bureau that card is going to be pulling from. So you may think you have good credit, but you don't know like maybe what your TransUnion score is. And if you don't, and you apply for something that pulls maybe TransUnion, you may very easily be denied. And then you really don't know why you were denied. So my goal is to try to clarify that a little bit more and get you guys to a point where you have a much better understanding of your credit score and your actual fundability and your individual credit profile. Another mistake is, applying without really understanding the process. And for me, one of the main things with the process of getting business credit, meaning business credit cards and business lines of credit, is that generally you're going to be using what's called a personal guarantee to secure lines of credit and credit cards for your business. The nice thing with that, though, is let's say you get a $30,000 credit card, a business credit card, and you rack it up to $30,000. It actually won't. Most business credit cards don't report to your personal credit profile, so it's not going to damage your utilization. You can carry balances, and often those monthly payments are low if you need to take your time paying those things off. And I also think too, just rushing the process. Maybe you get approved for a business credit card for maybe like $5,000, and you're kind of on this roll, and you're like, all right, let's jump in and try to get another one. And oftentimes you get declined because you have probably too many inquiries, or your credit profile or your credit score is right on the line of the acceptable scores. Some of the major pitfalls in credit, once again, using personal credit for business, not really knowing what your business credit or your personal credit profile is, applying without knowing how it works, racking up the inquiries. So inquiries is basically when you go and apply for something. We call these hard inquiries. And let's say you may get approved or you might get denied, but these inquiries kind of build up. And if you're trying to apply for lots of credit in a short period of time, you're racking up the inquiries, which will tell banks, hey, look, this guy's a risk, this girl's a risk, because it looks like they're really trying to scramble to get as many credit cards as they can. And so oftentimes, even with a good credit score, you can get denied just because you're trying to apply for too much credit too soon. And same thing, not knowing what credit reporting agencies or what credit agents, or I'm sorry, what credit bureaus that are being pulled when you're applying for certain cards and lines of credit. So you really need to know what credit bureau they're going to pull from in order to look at your credit before you even apply. And then same thing, trying to apply too often or too soon, especially when you've made major changes to your credit profile. Let's say you've paid off a bunch of balances, you're on the right track, maybe your wallet hub is showing, oh, look, he's got a great credit score. But in reality, a lot of those payoffs and things haven't really hit or had a little bit of time to mature and affect the credit bureau. So you really want to watch that and make sure you're not applying too soon, especially after you've just made some major changes to your credit profile. We'll look at personal cards and business cards and personal credit and business credit, and just kind of a little bit of a comparison here. Most of the initial business credit you're going to get is going to be based off of a personal guarantee. So even though it's not going to show up on your actual personal credit profile, as far as like the balances and the usage and all that, you're still going to have to personally guarantee that you're going to be responsible for that amount. So you will get hit with a hard inquiry with a lot of business credit cards, and that just affects you in the short term. But most of that is going to have to be personally guaranteed. So you're going to have a pretty good a pretty good personal credit profile, as well as a pretty good personal credit score. So we're going to focus mostly on building your personal credit so that you can be more creditworthy on the business side. And the goal here is to make you more creditworthy on the business side, not to build up your personal credit so that you can just, run up the balances and just, throw parties and have a great time and buy a bunch of fun stuff on your personal credit. We're trying to make you more creditworthy on the business side. We'll talk about inquiries. They'll show up on the personal side. They'll only hurt your score minimally. But if you are trying to get a bunch of different business credit cards, you can get those inquiries racked up. And like I said, even though you might have a really good score, those inquiries are really going to keep you from getting more and more funding. So you have to take it slow. Maybe get a couple cards, this month, wait a little bit, maybe a couple months later, try to get a couple more cards, and so on. You don't want to try to apply for 6, 8, 10 cards all in one day. And try to get as much as you possibly can. Think of this as kind of a long-term goal, right? Or a long-term play. And also, same thing, if you spend over 30% on your personal cards and even lines of credit and things like that, it's going to kill your personal score. So remember that, even though you might have what may look like a poor credit score, you might be in the 630s, 620s, and it's like, God, I've got really bad credit. But maybe the only thing affecting your credit score is just the fact that you're carrying big balances. And a lot of times you pay those balances, under 30% and more, ideally between 1 and 10%, you're going to see dramatic changes in your credit score. So think about that if you're carrying big balances. We'll talk about fundability here. Usually within the first, 1 to 6 months is when you can kind of work on your credit profile to become more fundable. Sometimes people can be ready to go right away in that first month. Sometimes it takes a couple months, and then it can take up to 6 months or even longer if you have big, major derogatories on your account. So be aware that this is not just an overnight thing, especially if you have a less lendable credit profile. If you do have good personal credit and a good score and a good profile, you may very well be eligible right away for a couple really nice high limit business cards. We can talk about how you can do even how you can make sure that you're actually going to be eligible for those right away, especially if you've got a good personal score and credit profile. If you happen to have an LLC that has a longer lifespan, if you are trying to get some business credit and then corporate credit, that can also be a really big advantage, having an LLC with a little bit more longevity. If you've carried good balances in your bank accounts, and if you've had good amount of transactions in and out, you've had some direct deposits, and you've had that 6 to 12 month good balances and activity in a business bank account, you can be eligible with that institution for good credit lines on the business side, even if your personal credit isn't the best. And another thing too, if you are opening up new bank accounts with your new LLCs, you really want to establish and continue to build relationships with lending institutions. And this is what's called relationship banking. And so let's say you've been with a bank for 10, 15 years, and you've got, personal bank accounts open, checking, savings, you've got business accounts open, you've got transactions coming in and out. You might already have a credit card. That's what we call relationship banking. So that bank's going to look on you more favorably than someone that might have opened an account that very same day. And for those of us that need to fix bad or poor credit, and it might not even be that you have that bad or poor credit, but for people that really want to pay attention to how to maintain and even increase their scores, number one thing, you want to pay down those high balances on your credit card, your lines of credit, your loan balances. Like I said, 30% utilization is good. You're going to see a lot of recommendations for that online, but ideally that 1 to 10%, 7% I heard is like the number, but 1 to 10% is going to be amazing. And maintaining that, so you don't want to have, let's say you've got $10,000 available on the personal side. You don't want to carry balances over that 30%, because that's just going to hurt your credit score. Then it's going to take a month, sometimes 2 months to get your credit score back to where it's supposed to be. So in an ideal world, you're not going to carry balances on your personal credit cards. You're actually going to use them, get your points, get your cash back, pay them down, use them, and rinse and repeat. And not only that, is that going to be good for showing really good credit utilization and credit usage on that card, it's also going to make you more eligible for higher balances, limit increases, and other cards of the same type of tier. You really want to make sure if you've got any type of like charge off, late payments, derogatories, all that stuff, that's going to crush your credit score. So, you may be able to fix things like this yourself by calling like your creditors and saying, hey, look, I know I was 29, 30 days late on this payment. Is there any way you can, remove that? And those can hurt you for up to 7 years. So you've really got to be careful with late payments. So you should set all of your credit cards to, paying the minimum every month, auto pay. If you don't, and if you miss payments, you really have no one else to blame but yourself, because the technology is good enough that you can set that up. And I would set that up on every one of your cards for sure. Another really good way to boost your credit profile and your credit score, if you have, a thin credit profile or don't have that great of credit, is you can actually get some secured credit cards and some secured loans or lines of credit. And the way this works is you basically deposit a certain amount in your savings account, your personal savings account, and then a bank can issue a secure credit card or a secure loan or line of credit that actually uses your savings account balance as, collateral. So they're going to secure that loan against your savings account. And, my advice would be to maybe have $1,000 if you can afford it, $1,500, $2,000, $3,000 if you can afford it, to deposit and to use for a secure credit card. And if you use this credit card frequently and you're paying down the full balance, sometimes within 3 to 6 months, those cards can graduate to an unsecured line, and they might even give you a bigger limit. So it's going to look good on your profile to have a card that you're keeping the utilization low, that you're using, even if it's a secure card. But then once it graduates to an unsecured card, that's really going to boost your credit profile in a meaningful way. Same thing with secured loans. One thing that a lot of people do is they'll deposit a nice chunk, maybe $3,000, $2,000, $1,000, or even $500 into a savings account, and then get a secured loan. And then 2 or 3 days later, they pay off 90% of that loan, so that they have really small monthly payments, if any. But then that's able to stay on their credit report for a couple years. It's good because the utilization is going to look low. And also it's going to show an account that's in good standing. And so that's going to help with your actual credit profile. Another thing that helps too, if you've got friends and family with good credit or responsible credit, we'll call it, and let's say they've got a card that they don't really use or one that they pay off every month, but they don't carry a balance on it, that's going to be critical. Really make sure that you're going to work with someone who's really reputable. You don't want to pay to get out, be an authorized user. But if it's like your significant other, your mom, dad, if they've got a card with maybe, let's say, a $10,000 limit or $15,000 or $20,000 limit or even 5,000, you can be added as an authorized user. You shouldn't get, and I would not want to get that card physically. It means that you could technically, but really what we're trying to do is get added as an authorized user so you can take advantage of their higher limit, their low utilization, and their responsibility with that credit card. So that's also going to help boost your profile. But be aware, you really got to have conversations with these folks and make sure that they're not the type that's going to rack it up, let's say around the holidays, and jump that utilization really high for a month or two, because that's really going to hurt not only their score, but it's going to absolutely devastate your score. So if you're working with people that are doing that, you want to get removed from that card as soon as possible. But it is a good way to help boost your individual credit profile, to make you more lendable and make you more credit worthy as well. Of course, any new recent inquiries and new accounts, they temporarily hurt you. Like I said, it triggers to the bank that, hey, they're trying to get credit fast. So you really want to be aware of like how many recent inquiries you have, what credit bureau they're attached to. So you might have 10 recent inquiries from TransUnion, but only 1 or 2 from like Equifax. And if a card pulls from Equifax, you might still have a good chance of getting that card. But if you apply for like the TransUnion card, you're probably going to get denied, right? And then once you're ready, and this is all about building your personal credit profile. Once you're ready, you want to try to, if you do need to, get a better profile going, you want to apply for those good cards or those higher tier cards to help build your profile. And like I said, it's not to try to, not like you're trying to get these cards to, throw money around at the strip clubs or anything. This is money that's going to help you secure bigger lines on your personal, or I'm sorry, on your business side. I'll mention a little bit later, but another really excellent thing you can do to help with your credit profile to make sure you have more available without even having to go and get credit inquiries and without having to apply for other cards is if you've got a couple cards already with decent limits, every 6 months, you should be asking that card company to increase your limit. And over time, you could go from having maybe $8,000 available to $10,000, $15,000, $20,000 available on those cards, which if you did have to spend some money, your utilization would be kept low. But then as you apply for business cards, those cards are actually going to help you get higher limits on, because like, let's say you had a Capital One card with a $2,000 limit, then in 3 months, or let's say 6 months later, it bumped up to 4,000 or 5,000. That's going to help you get a higher limit bank business credit card, right? And, so as far as when we talk about these good personal cards, you want to look for the higher limit personal credit cards, so you have that comparable credit where like the business card, if they see you've got a $10,000 Chase card on the personal side, they might throw you 20,000, 25,000 on the business side. For me, these are just a couple cards that I like. These, you don't have to be married to these cards, but they're easy to get if you have good credit. The Apple card, the X1 card, the mid to higher tier Chase cards, Venmo card can be good. They do have good limits. The Amex family, Navy Federal, and any good national credit credit unions are great. Bank of America, same thing. You want those mid to high tier cards. But any of these companies that you already have an existing relationship with that you've had for a while, your odds of having more success, like if you've got a Bank of America personal checking and savings account that you've had for 10 years, you have a much better chance of getting like a personal credit card, if not a business credit card. So foster those relationships with those lending institutions for sure. And then you really want to get other good cards, from your current banking institution or ones that you might be opening new accounts with. One thing you really want to stay away from is any of these credit builder type of cards, not like the secured cards. Those are totally fine. Those are going to help you build credit. And there are definitely good, bad, and ugly in those cards. But like the credit builder type cards that anyone can get that have, maybe a high annual fee that give you like a $250 limit or a $500 limit, those cards are just going to do nothing but drag you down. And if you are getting offers for these cards, you want to stay away from them because yes, it's nice to be able to get credit, get more credit, but they kind of have like some surprise fees. They're not really going to raise the limits for you, and there's really no benefit to having them. You want to shoot for much higher limits. So you're on paper looking like a much more lendable person, right? And just remember, when you apply, your inquiries can affect you for 6 months. So you don't want to go on these sprees of trying to get 50 cards in one day, because it's just not going to work, right? And then once you've got a good personal profile, ready, you've got maybe some secured cards, some good, decent average limit cards, and you maybe have a line of credit or a loan that's got a low balance. You want to wait a little bit, let everything kind of season, maybe another few months, and then you can start to apply for business credit. But before we do that, we'll talk, a little bit in the future here about when is a good time to actually apply for that business credit, and what you need to look out for when you're ready to apply. And same thing, like I said, ask for those limit increases every 6 months on all the cards you have. And same thing, before you apply for personal cards, and this even applies for business cards, is you really want to do your research and understand what the minimum qualifications are on some of these cards. Some of these cards, there's companies like Wallet Hub and other companies will do some data mining of sorts and try to figure out what people are getting, with what scores are they qualifying for these cards. So you might see a minimum score of 700. You want to make sure you exceed that minimum qualification just to be safe. Same thing, you don't want to apply for those starter cards, those credit builder type cards, unless they are reputable secured cards. Then when it comes to applying, right, remember that your household income isn't just what your take home is. It's all the responsible adults in that household. It could be you, your wife, your boyfriend, girlfriend, and the 21-year-old kid living in the basement. If you're all bringing in income, you can actually add all that up, and that actually counts for household income. So that's going to help with, and it's all self-reporting. And usually, if you look at the little question mark right next to the income, it's basically going to say household income. So it's whoever's responsible for paying debt in your household. So you might be able to add a much higher limit than your own personal income. Same thing with rent and mortgage cost. You're going to be splitting that amongst the responsible adults in your house. So let's say it's you and your wife, your husband, wife, roommates, all that kind of stuff. If your rent, let's say, is $2,500, you can split that in half and say, hey, this is my part of it. So your income can be higher and your rent or mortgage payment can be lower. And that's exactly what they're looking for on those applications. Similar, we're going to keep down this personal credit kind of journey, which is also going to really factor in when it comes to applying for business cards, because your business cards will actually be looking at your personal credit. So we're going to work on, this is going to apply for both your personal credit and your business, when you're looking to pull, and get some business credit cards. You want to actually know what your real credit scores are from places like MyFICO, or make sure you're getting your accurate credit bureaus from your credit scores and credit profiles from all three of these credit bureaus: TransUnion, Equifax, and Experian. And you want to also look at these for any kind of discrepancies, whether you've got a bunch of jobs listed, a bunch of houses or a bunch of addresses listed, your names are spelled wrong. Those are all things that you can work with these bureaus to rectify, to make sure that you have all the same information amongst all three of these bureaus, right? One trap that people fall into with their personal credit is they look at things like their Wallet Hub account or their NerdWallet account, and they see the Vantage score, and it's like, wow, my credit score is a 725, or my credit score is a, whatever. Like, it seems like it's really good. Those Vantage scores are just kind of a snapshot of your overall credit. So when a credit card or they go to pull from a credit bureau like TransUnion, Equifax, Experian, they're not actually looking at that Vantage score. Your Vantage score might be a 730, but let's say your TransUnion might be a 680. So even though you may think you've got a really high credit score, sometimes it takes TransUnion, or takes the other accounts that you have, takes a while for them to report to a TransUnion, and it may take a little while for that to show and your score to get up to that higher level. So you really want to know, if you're going to apply for a credit card that pulls from TransUnion, you want to really know what your TransUnion score is. So be aware of that. And that's something I would say, every week, every 2 weeks, really stay on top of your scores, stay on top of your payment history, all that kind of stuff, and really take control and learn as much as you can about your credit, because no one really can help you in these kinds of cases but yourself. And there's a lot you can do to make yourself really credit worthy. And like I said, if you get an opportunity that pops up where you need $20,000 down and you don't know who to ask for the money, you might have a business credit card that you can pull $20,000 off of without having to take a big hit from like a cash advance or anything like that. And you're able to deploy that money instantly and take advantage of that deal that fell into your lap. So this is sort of a preparedness for the future kind of deal. You definitely want to understand your overall profile, and profile is basically like, do you have a mortgage? Do you have a car loan? Do you have lines of credit? Do you have loans? Do you have revolving accounts like credit cards? You don't necessarily need to have all of those, but as long as you have a relatively beefy credit profile with 3 to 4 really good cards in that 3 to 5 to 8, $10,000 limit range or higher, and then you have maybe like a personal loan that's paid down quite a bit, and maybe a car loan that's paid down. And but for me, I really only have credit cards, and then I have one personal loan, and I still have a pretty decent credit profile. However, I feel like if I had more in addition, like a maybe a secured loan would probably help my credit profile. But that's just something to think about, is really understanding your credit profile, because it's not just your credit score that matters. Your overall profile can play into whether or not you're going to get declined for credit on the personal and business side. Also, try to understand how scores are calculated. Utilization and late payments are probably 65% of your actual score. So like I said, you might have a crappy credit score, but if you just paid down your cards, your score might be in the 700s and you might have a really awesome score. So really try to understand how credit scores are actually calculated. And that's something you can spend a lot of time on YouTube and Google really learning. And like I said, you want to take control of your personal credit, and which will help with your business credit, and you're going to be responsible for your future, going through something like that. Think about this too. Any changes you might make, whether you pay off balances, add new accounts, those kinds of things can take time to hit your account. So let's say you've boosted you've gotten a couple new cards, which really makes your available credit much larger. It takes a little while for those cards to report to the credit bureaus. Same thing, if you pay off cards, it doesn't hit your credit score, the bureau, for sometimes up to a month or more. So even though you're making really positive changes, you may not see the benefits to your score for a month or more. So you got to be patient there. And even though it's hit, some of your credit bureaus, you want to make sure that it's had time to kind of settle in, and that's your thing, right? Otherwise, if you go out, you make a payment on a card, and then you go out and try to apply for more credit, you're not going to understand that you got denied because nothing really showed that you actually made that payment yet. So be patient, right? And same thing, inquiries and any kind of balances that you carry from month to month can have a long-term influence on your score. The inquiries, even though they fall off in 2 years and usually don't affect you for, after the first 6 months, if you're constantly, like applying for cards, it's gonna, or cards, I should say, it's really gonna hurt your chances of getting credit in the short term, and sometimes even in the long term, if you just keep trying to apply, keep applying. Sometimes you've got to just wait for that stuff to fall off your credit profile. So when it comes to obtaining business credit, like I said, number one, you want your personal credit profile to be good credit score, good profile. I like to think in that 680 to 720 credit score and up is going to be a good starting place with very little derogatories on there. That's a good starting point to where you can kind of build up and grow from there. Your business name, this may come more into, when you start to get lending from banks as far as like loans for, for property and things like that. Or even if you try to go get, business, not just business credit, but corporate credit, which only uses your EIN. Your business name is going to be a big factor in sort of the risk assessment. So if your business name is in a high risk category, you may be either denied, or you might be given much smaller limits than someone with a less risky business that they're in. I like to think business consulting, any kind of consultancy, is going to be in a real low risk category, because even though your LLC might be in the real estate investing thing, real estate investing business, you're also doing much more than just investing in real estate. You're also, you're constantly talking to clients, you're constantly working with people, you might be teaching people things, people might be coming to you asking for advice. So you're not just in the real estate investing game, you're running a business that does more than just real estate. So don't limit yourself just to one category and high risk category, right? And that's going to take place when you form your LLC. You want to pick a name that is kind of even keel, that it doesn't make anybody think that you're in, up to no good, that you're in a really risky category. So be careful with the names you pick. This falls into the NAICS code. This is the category of what your business does, and you can Google low risk NAICS codes. And I would do this before you pick your business name, before you form your LLC, because then you can start to see what are those categories that lending institutions and banks are going to look as low risk. And so let's say business consulting is in the low risk category. Why not set up your business as a business consultancy, even though you are still purchasing real estate and investing in real estate? Because sometimes those businesses can grow and turn into other things. Just like I have a guide business, a fishing guide business, but I do a lot more with my guide business. So it's not just what your core business is. You're also going to be doing a lot more business functions than just your main business function. You'll also need your EIN number, which is your basically your business's social security number, your business's tax number, your employer identification number. Make sure you get that. The DUNS number, this is gonna be more for corporate credit, but it also helps you build business credit as well. DUNS is Dun and Bradstreet, and that is one of the oldest, if not the oldest, business credit bureau. You want to register your business there. That's just going to create those links of legitimacy from all these steps. Let's say 2 through 10 are all going to line up in the lender's eye and say, okay, this is legit, right? Next thing, you're going to want a website. It can be a one-pager, but something that basically describes your business, has some links to you, some email contacts and whatnot. And this is going to tie into the next thing, which is your email address. You don't want, something at Hotmail or at Gmail, pixie dust at Gmail, whatever. You don't want that. You want it to be linked to your website's domain. So one of my real estate businesses is Mile 82 Enterprises. We also do a lot of business consulting. I actually consult with a lot of other fishing guides and small businesses in our area. But my website or my email address is info@Mile 82 Enterprises. So as I'm sharing emails back and forth with people, especially with banks and lending institutions, I'm going to come off as looking very professional. And like I said, this is a cohesive link from all these steps, to maintain that legitimacy. And the main thing that a lot of these banks and credit card companies are, subject to is a lot of times there's fraud. There's people and bots signing up for credit cards all across the world trying to fraud these credit card companies. And so really what they want to do is make sure that you are who you say you are. And then your business address. Your business address can be your home address. There's really nothing wrong with that. You'll hear people say, it has to be a different physical address or a virtual office. As your business grows, as you look for more and more funding and more credit, you can get virtual offices if you do business at your home address. The main thing here is just trying to protect yourself from sharing your home address with the general public, especially as you're making real estate transactions. And heck, even if you're cold calling people, you don't necessarily want people showing up at your door that are annoyed with you. And so getting a virtual office, if you are operating out of your home, is a good idea. That way you have a physical address that actually people can look up in Google and say, oh yeah, there's actually a business there. But they don't need to know that you're not actually operating out of that. So virtual addresses are great. And then once you've kind of got your LLC started and everything kind of in line, you want to open up a business checking and savings account. That way you can separate your personal funds from your business funds. And then two, as you establish a relationship with these banks, you're going to be opening yourself up to more opportunities to get business credit. A couple good places to start with business credit, and just keep in mind, you don't want to apply for all of these at the same time, but these are the ones you want to. There's definitely way more than this. There's a lot of really good institutions, especially like I said, your small credit unions in your hometown, the ones you're already doing business with, are going to be amazing. Probably the best places to start, to be frank. But you want to get into the American Express ecosystem. Citizens Bank, they give you really high limits, especially if you have good credit and you have an LLC that's been around for a while. The GM card, the Goldman Sachs GM card's great. Your Chase Inc. Family of cards, your Bank of America business credit cards, Wells Fargo, Navy Federal, even like a PayPal business cashback card. And then there are some fintech companies that actually will, instead of using your personal credit profile, they'll actually link your bank account to their software, which is all safe and everything. So, but they're going to look at like your average balances, your transactions, your current balance, and they might actually give you a $50,000 credit card or $25,000 card or a line of credit based on your bank activity. So you, in theory, could have poor credit, but have a lot of good activity that they like to see, and you could be eligible for what's called a fintech line of credit or credit card. And then, like I said, your lending institutions currently are going to be the best places to start. If you've already got relationships, go for it, And a couple things to conclude, you really want to take this slow. If you're eligible, go for it. But, just realize that it's kind of a long game. There are ways to kind of acquire quite a bit of credit in a short period of time. Do your research. There's a lot of really bad information on YouTube, but there's also a lot of really good information. If it seems too good to be true, it probably is. So don't get so excited when you see $100,000 credit card with 560 credit score. It really is clickbait, and they're just trying to get you to click on theirs. And sometimes you go and apply for those cards and you get denied, and you're like, and I've done that lots of times over and over and over, and you just keep getting denied, and you're like, you know what? I'm not ready to apply for another card. What am I doing right now? So you really have to rein yourself back in and be like, okay, just relax, take it slow, right? You really want to know and stay on top of your personal profile and your credit score. I can't say it enough, guys. I for so many years just pushed it to the side, pretended like it wasn't a big deal. But then when it came time to like try to get credit and I wasn't getting it, I was like, oh crap, what do I need to do? What do I need to fix? And so staying on top of it now, making yourself credit worthy for the future, and then building that credit profile over time is going to set yourself up to make really, really big moves for sure. You also really, really, really want to limit your personal credit card use. Even if you get a few more credit cards and your average, let's say the amount you can draw from is $40,000, you really only should be using personal credit cards for emergencies, but also for, if you are going to use them as your daily cards, you got to pay them off every month. You got to pay them off before that billing cycle ends. So they're not there for, running up the balances, for, throwing parties and going crazy, because that's the kind of stuff that's going to hurt your personal credit. And then when you go to apply for business credit where you may need it and you might be in a hurry to get it, you're going to get denied, and then you're just going to be setting yourself back. So really, really watch and take care of your personal credit card use. And then, like I said, huge thing is work with your current lending institutions. If you've got great relationships with your current lender, they're going to be a great place to start for sure. And then build new relationships with new banks and lending institutions and work your way up through their internal scoring system. Same thing. Don't be tempted to fund your lifestyle on these cards. Let's say that you do get a $35,000 Citizens card. Yeah, you could buy the highest end MacBook Pro. You can legitimately go and buy a car, all that kind of stuff. It's the short-term stuff, guys, is just it's not worth it. And I'm a product of living short-term, and now as an adult, I'm starting to kind of understand how this all works. This is all stuff that none of us are really taught in school. So learn from my mistakes, and don't just try to live a lifestyle off of these cards. And then lastly, just get ready to fund your business and not only fund yourself and your deals, but to become a lender. It's very liberating when you have access to 50 to 100,000 plus of credit that you can get 0% interest on for up to 18 to 20 plus months, where you can make a lot of big moves. I mean, I just bought a bunch of equipment that I'm going to need for my guide business here that normally I would pay cash for, and then I would just be cash strapped throughout the season. Now I can either make payments on those or pay them over time with 0% interest when it's most convenient for me. The last thing I'll say about business credit is that it's going to be a great way to help you rein in your personal credit. It's also going to really help limit your exposure on the personal side. And then, like I said, having business credit opens you up to, like I said, when you're able to fund your own deals and make interest off, let's say you lend someone $15,000 and you make a few thousand in interest, there's nothing better than being able to deploy someone else's capital with 0% interest and make money off of that. Once again, guys, I'm not a consultant or anything like that. I'm not an expert in this field. It's just something that I've kind of taken on over the last few months, and it's something that's kind of opened my eyes up. And I've seen the possibilities of what I can do with this type of capital, and it's certainly liberating to be able to know that you're able to kind of make the moves when they come across your desk. Love this community. Hopefully, I've been able to give you guys something back. And if you have any questions, if you need any help, I can help steer you at least in the right direction and kind of keep you away from all the crap that's out there. So I really appreciate your time, guys. And to the SubTube family, I'm super pumped to see where my journey is going to take me and where a lot of our journeys are going to take us. Thanks for watching, guys.